Hey everyone, welcome to the Profitable Entrepreneur Show where we take lessons from the best. And I have got a friend, um, a mastermind colleague, business expert, someone I admire greatly, James, although you might hear me call him Jim because I that's just how I know him, but James Rericha with our veterinary and amongst other businesses, but we're going to get into that. So welcome, James.
Thank you. What a nice welcome.
Oh man, you are one of the smartest men I know, and I'm sure that the audience is going to discover that pretty quickly. So I generally like to start with kind of your origin story of your business, like what businesses do you own? How long have you had them? Let's just kind of set the stage first of all, and then we'll dive into some specifics.
Yeah, I think I got the drive for business watching my father run a very small business. I bought my first duplex when I was a sophomore in college. Um, throughout the next decade, um, finishing a degree in professional engineering and getting a master's in engineering management, I worked amongst government, private sector, had a lot of experience, but I knew to hit my end goals that I really wanted to be a business owner. You know, I get lots of flexibility, but at the same time, I work a ton of hours.
Mm.
There's nothing like being your own boss.
Yeah.
And you would ask me about some of the businesses I own. You know, I think the first major business was my wife and I purchasing the veterinary clinic in Lynn Creek, Missouri, that she had worked at for a few years. Um, we worked pretty hard for about 2 years to come up with a valuation and a fair number and come to an agreement with the current owner and her employer at the time, which is an interesting situation working through that while you're still employed. Um, and we learned a lot from that transaction. Um, but we just haven't looked back, and that was in May of 2016. And since then, we've acquired, um, we've got 7 different veterinary practices now, some ancillary or horizontal integration of crematory services and other positions within, um, other companies that we can talk about as well. More recently, I've taken a partnership with Alx Council in Eldon, Missouri, which is a small manufacturer. Lived next to one of the partners and owners for the last decade, and so just developing relationships all the time and listening. All of our acquisitions have come from listening to our vendors, listening to what people don't say necessarily in words, like what what can we get out? How can we find something that's mutually beneficial that lets me hit my goal, but also lets you hit your goal? Are you thinking about retirement? Could we partner and become better together? So that's probably a whole lot more than you just asked for, but keep probing me.
Yeah. Yeah. Well, I mean, there's a lot to unpack just with that. Number one, the listening for opportunities. I do want to kind of dive into that a little bit. But I mean, you have some massive goals, right?
Absolutely. So goal setting is huge, and it all started with I would say a personal goal. I'd like to fly private pilot. I only rent a plane right now, but I'd love to have a large enough business to have a business need for a plane someday. So that's one of my personal goals.
Okay.
I love being able to control, where we head. So big goals have led me to dream big. For the longest time, I said we would have 300 practices. I don't know if we'll hit that again, or still the goal has shifted. Currently, I'd love to be the largest employer in our area, and so I see my competitor as a local hospital who employs about 1,200 employees, or Walmart here locally who employs quite a few employees. And we currently employ just over 120 between the different organizations.
Yeah. So I always found that fascinating when you shared that goal the very first time in our CEO peer group or mastermind, essentially, that one of your big drivers was to be the largest employer in our local area, which is really cool. That's not normally a goal for small business owners, but you're doing it under multiple businesses, right? Is that is that an
Yeah,
accurate statement?
it's fair.
Okay.
So up until recently, last year, we operated all under one entity, all the vet hospitals. We had tried keeping separate entities. I like everybody from a culture standpoint to be part of one team. And so we set it up to take on the risk as one. There's plenty of much larger companies in this world than we are, and it's very doable. And so we've grown as one team, one unit. We all work and succeed or fail together.
Mhm.
Um, you know, Recently with joining REC, that's I just took on a small stake of that entity, so it makes it hard to feel like one team. But there's so many back office services that we can blend together between the teams, whether it's bookkeeping and payroll or accounting, and it allows us to get that efficiency of scale. And so that's where we're headed.
Okay. Yeah, I know from the last show where I had Steve Denny on, he was talking about one of the ways to grow. There's lots of ways, but one of them is through partnerships and acquisitions where you can leverage resources across, that companies have and pull them into one model. And that's kind of what you're doing now, right? With your benefits and payroll and all of that.
Absolutely. I mean, you would never think, what does a veterinary service company have to do with a small but worldwide manufacturer, world renowned manufacturer of recording studio furniture? Um,
Right.
but a big part of what we are is our culture of our employees,
Mhm.
and our cultures line up very well as far as taking care of our team, working together, providing the best products in our market segment. And so when the cultures align, again, so much of that back office does align. We have similar benefits, or we've been able to expand our benefits because we've grown the team together.
Mm.
Each year I've typically added, year, 2 years, we've added a benefit. We went from not having any benefits other than some sick and a little bit of vacation time to now we have, life insurance provided for our employees, health insurance provided for our employees, short-term, long-term disability. So we've grown that each year, and there's certainly a cost to it, but the scale of things start making it a little bit easier to administer on the back end. I don't have to have an expert in each one of those fields, or it's
Yeah.
easier to have an expert in each one of those fields because we have scale.
Yeah. And then benefits are something that small businesses really struggle with. I mean, it's hard as a small business owner, right? Like my company is 25 years old and I just started offering health insurance 3 or 4 years ago now. Not long, because it's such an expense and there's so many challenges involved. So I love the strategy that you have done with that. Now you have another business too that is seemingly unrelated to the other two. Tell us a little bit about that one because that's brand new, right?
Absolutely. You know, uh, my neighbor Tim, who's a co-owner in Argosy, we had an opportunity to get involved with WP controls or wireless precision controls, and they have a product that's called Icon, which is basically a smart. It's better than any other boat lift on the market, boat lift controller, but
Mhm.
it's a smart boat lift. We can connect your phone to your boat lift controller and you can launch your boat, you can monitor it, you got a camera, we've got ways to turn on and off de-icing equipment based on temperature or schedule. So all these things that, this was an inanimate object that people had to walk down to. There were some other devices that worked similar to a garage door remote, but I was in Thailand last fall for an anniversary trip, and just for the fun of it, I put my boat down in the water to a board position and then raised it back up from the other side of the world. You know, I don't know anybody else that can do that, and so we're fulfilling a need in the market. People often put their lifts up when they leave, and so this provides a safer way to do that. Um, but
Yeah.
but it's definitely a new venture for us. It was kind of pre-revenue as a company, which I'm used to buying companies that have a revenue stream, that have a known business model. So that's a whole new world of new challenges for sure.
Yeah. A little risky, but the cool thing and what I admire so much about you, we both know a lot of entrepreneurs, business owners of varying degrees of scale, but small business owners. But when I think of you, I think true entrepreneur because you you are successfully running multiple businesses in seemingly unrelated industries and I mean, that is a true entrepreneur mindset, but you have expertise that you bring to the table of all of those companies that is just impressive. And what do you think sets you apart or gives you the ability to just move from industry to industry and have success? Because I have my opinion on what it is, but how do you see it?
I don't see anything as a hurdle too large or insurmountable. I ask often, why not us? You might look at a large company like GM or GE, or any Fortune 500 company and say, wow, they're doing that in Silicon Valley, or wow, they're doing that in New York City. Well, why not here? Why not us? What is preventing us from doing that? They put their pants on one leg at a time. They go out there and they find skills, and so they tackle it. So one, no problem is too large to tackle from my perspective. And then two, I also get very granular. Like, I still love seeing, while we've improved the efficiency of it, I love seeing bills come across the desk, because in my memory, I could sit there and say, whoa, what is this one that's hit us three times in a month? And do we still use it? And I guarantee in all these big companies, everybody's going through cost cutting this year as part of, inflation. And you can just take a look at your books and find so many things that you're like, that doesn't provide the value. Yes, it worked for us 5 years ago. It's what we needed 5 years ago, but it's
Mhm.
no longer providing the value we need. We need something else that drives more value. Now, it may not be less cost, but something that drives more value. And so, whether that's changing your trash company, your internet service provider, or changing the way you market on the web, and we haven't even talked about, we operate. I'd say our largest asset class is actually real estate. You know, I,
Yeah.
I we we have more equity in real estate because we own the real estate for most of our entities, and we operate, a couple dozen commercial property, or not properties, but units, commercial units, and a couple dozen residential units. And so we have a big breadth. And again, a lot of our back office manages all of these things under one co. We don't have completely separate teams from all. Um, and we really look at all the problems that we can. I like looking at the situation and how do we solve problems? How do we make ourselves more efficient? And so we tackle that with vengeance all the time.
Yeah. Um, one thing that I've seen just through masterminds and owning my own business, a lot of times business owners, and I'm gonna, you know, stretch and say I think most small business owners really struggle with the financial aspect and profitability. So, since we were talking about that and improving efficiencies, cutting costs, and making yourself more profitable, can you just talk to me a little bit from an advice perspective for small business owners on things that, you're looking at specifically, they should look at specifically, and how often? Like, how often should we be doing that? Because it matters. Revenue, gross revenue is irrelevant if profit isn't there, right?
Absolutely. And in fact, that makes great targets sometimes. If you can look at businesses that aren't profitable but have some gross revenue, you might be able to, if you can see these things that I'm going to talk about, you might be able to make improvements that make them profitable and drastically improve the value of the company.
Mhm.
Um, and so, again, looking across all of our segments, challenge the way you do things, as far as, it may be the way you've done it for the last 10 years, but I think the number one thing I love seeing on a vet clinic that I go look at for acquisition, and I've looked at dozens to the few we've acquired, just because we're not right fit for culture, or monetarily we're not in the same place. Um, but the one transaction I love to see is phone service. They're all paying for phone service, and they're spending,
Mhm.
$1,000 a month, $800 a month on phone and fax lines. They have maybe four lines coming in the business. you know, we've implemented a VoIP solution where we spend, $200 to $300 a month on minutes, and have a partially managed service on the back end to host a VoIP service. And we can take, somewhere in the neighborhood of 64 calls simultaneously between all the businesses. So, people aren't getting the busy tone, they're getting better service.
Mm.
We don't have a fax line anywhere. Um, I know tons of vet practices that still have fax lines, and they say, well, this is there for medical, but it doesn't. There's no standard that says it has to be there. We're not. We don't have regulations like maybe a human hospital would to maintain that for certain items. And so you can find other ways to do that business and cut that cost. And then I think, so that addressed the cost side. You really also have to address the valuation side. I run into so many people who don't charge enough for their time or don't charge, they're afraid to charge for what it costs, especially now that we've seen, inflation raging for the last 2 years. I know the Fed wants it to slow down, but, I think we saw our largest increase in the last 2 years this past January. And we're looking at it more often because of inflation. Um, Depending on your industry, in the manufacturing world where we have several vendors, it's hard for us to make a change more than once per year. We have done it or it can be done. In the vet services or, service industry, you can make that change quarterly if you need to. But you've got to keep up because when you can charge enough and bring enough in, you're also more stable because you can pay your team better, you can have the better benefits, which creates stability in your team, allows your team to become more efficient because they know what they're doing and you're not spending time training up new people.
Yeah. Yeah. Um, are you comfortable sharing, just I like to make it relatable on this show. So like over the history, doesn't have to be in the past, recent years, but did you have any major financial hurdles as an early business owner or, midstream, some way that you had to overcome? And if so, how did you overcome them?
Uh, uh, we have had them, and we continue to have them, and I think you're a better leader if you can try to anticipate where your weaknesses are, so that you know how you're going to handle them when they happen. Coming back to trying to have funds in the bank so that you can operate for 2 3 months. Time is your biggest friend if you have something going wrong and your revenue is shut down for a month. You're no longer begging your creditors or saying like, "Hey, I need a line of credit." um, Time allows me to work to solve a problem. And so I can never have enough time. That's always a challenge, building enough funds as we grow to keep having a longer window because that pot of money gets larger.
Mhm.
Um, and go back to the past, the very first business was, I would say, was the rental I bought in college, as a sophomore. I thought, hey, this is great. I got someone paying my rent. I'm spending $300 a month myself. And back at that time in 2003, the rents I think on the place were $400. So I was actually saving $100. Someone else was paying enough with the mortgage, and then the furnace dies. I got a $7,000-8,000 expense at the time. I'm a college student. I don't have that much in the bank, and so you know that was borrowing and taking care of it and learning, hey, I need to make sure I have reserves for these incidentals. um and so then as we get larger, I will say more recently, as we have changes in staffing, we go through it. We had challenges that cost us you know 13% of our gross revenue from a large producer in our organization. And it's very hard right now to hire doctors of veterinary medicine, especially ones with the skill set that this doctor had. He's a great physician or DVM, veterinarian, and knows his job very well and has a great skill set. And so when you lose that, it is hard to transition through that. We've never, knock on wood, we've never laid anybody off. That's a big pride of mine. We have worked through attrition. We've said, hey, we're going to be on a hiring freeze. We're going to work, as people move on, we're not going to fill those positions so that we can be in a better boat. Um, so I don't know that I have all the answers, but I really try to look across the organization and understand, where can my risk combine together to make a really big risk, and where are we separated? And this links me back to like the second vet practice we bought. We are located, you and I, Sandy, are located at Lake of the Ozarks, Missouri. It's very much a recreational place. It is primarily owned by second homeowners down on, in our counties. And so when the economy takes a dump, it can be really rough on that segment. Um, and so the second clinic we bought was actually at Fort Leonard Wood, which is a military base.
Mhm.
Well, when the economy's bad, who spends money? Usually the government. So we saw that as a very good pairing, so that when one is seeing a better time, the other one is seeing a worse time, and they match up well. They don't typically compound. Not saying they could never compound, and I need to be worried about that, but they don't typically align each other.
Right. So, how do you, speaking of economies just things, things that happen unexpectedly. How do you, as a business owner, and especially of multiple businesses, how do you look for, find, identify blind spots so that you can, prepare or sort of anticipate or, risk mitigate things like that?
That comes from just trying to understand the industry you're in broader. Um, you know, we can't control um, wars happening overseas. We can't control what the Fed decides to do next month. I can certainly sit here and guess. I've read articles saying they're going to cut 6 times this year, and at the same time, I think they're going to go back up based on some inflation data. We're not going to know that, and so again, trying to build reserves so that you have time to adjust is very important. Um, you know, I also look at it, everybody else in the country is facing very similar challenges. They have the same headwinds. And so you will see companies go under, you will see companies not survive. Those will be buying opportunities for companies like myself. And so you need to be nimble and be able to uh, react and to change your business as the environment changes around you, because there will be some that thrive in this changing time, and that's the time when the most market share is up for grabs, when there's things that are changing. When things are normal and flat, people are happy where they're at, they're getting things done. So it can be very positive if you look at it in the right light. And it it's hard. I don't know all my blind spots, but I try to think about them on a regular basis. I just think thinking about them is helpful. And then I've learned a lot just over time. So as you operate in your industry longer, people who operated through the 80s know what the real estate market was like in the 80s when, interest rates were 15, 16%
Right. Which is
on real estate.
inconceivable right now, but it's possible.
I'll give you another piece that, talk about stability. We just purchased a clinic and we were offered up, and the bank assumed we wanted a variable rate loan. They're like, oh, they're going to cut several times this year. I turned around and asked them, like, that's not what we've typically gotten from you guys. We kind of want the 5-year fix that you had with the float after that. And what are you going to offer us? And lo and behold, it was actually 1% less than the variable rate because it was based on a different standard. And it's like, I'll take the known evil for the next 5 years because I've built my business model around that. I don't need to be the commodities market and dealing with the rate fluctuating monthly and changing my payment. I have a
Yeah.
known. So I would rather take the known typically.
Yeah. So this is going to be kind of a strange question, but I feel like for a show like this, we're going to have a range of listeners. And so for a business owner who's watching this and they've heard you say things like reserves and variable rate and flat, and they don't even know what you mean. What is your recommendation or your best advice for a business owner who, feels and sometimes proudly admits kind of being financially illiterate, but they just watch their bank balance, watch the checkbook every month and keep going because it's not the ideal way to run a business, right?
Yeah, absolutely. There's some great books out there. Profit First. I want to jump back to Alx Council. I've been a member of that for several years. I was invited by one of my current partners just after having drinks in the driveway because we're neighbors. Um, I hear other CEOs' problems, so getting in the room with other CEOs is, in my mind, very important because you will hear things that are outside of your specific realm, and they will still
Right. Let
apply to
me
you.
let me just do
Yeah.
a quick interrupt on that, and then I want you to continue what you're talking about. Alx Council is a CEO mastermind. So if you don't know or haven't never heard of Alx Council, it's like a CEO peer group. So it's business owners of various levels sitting around the table once a month for like 4-hour increments where we really dive deep into each other's businesses. So now we've set the kind of the frame for that, and go ahead because I thoroughly agree with you that masterminds and peer groups are so essential.
The peer group is essential in the sense that I can be comfortable talking there. There's things that I might share with my team that I will eventually share with them, but there's things, if we have big ideas, they can scare people who aren't used to lots of change, and so they need to be more well thought out before you present them sometimes to your team. or you're dealing with a challenge and you really need somebody who actually sits in the same shoes you do. It doesn't matter if they're running a company that's doing $1 million a year, a company doing $50 million a year, they are going to have some relevant advice. I feel like we got away from another topic. You were asking me some questions there.
Yeah,
Um,
no, this is great because I really, everybody will come to this show or interview with a different background, different expertise, but everything in common is the fact that they're business owners and entrepreneurs. And so, part of it is not following my questions. It's kind of leading from the expertise that you're bringing to the table. And, it's funny because in every single, this is the third episode now, so it's a new show. But so far, the commonality is that the mastermind or peer group has come up in every single one of them and the importance of it. So, I do not see that as a coincidence. I see that as, these are smart business owners that really leverage the experience and intellect of other people, of their peers.
well, I would say I go into most relationships trying to feel that I can learn more from you than you can learn from me. Those conversations are great. But I did recall your question. You were talking about operating, from your bank account, and I've talked
Mhm,
about, a little bit about Profit First as a book, we read in our Alx Council group,
mhm,
and I think we're all guilty of it. You see a growing balance, and if you're not up to date on your accounting, you're not accounting for profit as an expense, you you may not know where you're going to be at the end of the year. And so a lot of us, and I still to today, I will check my bank accounts probably 2 or 3 times a day, and it's part of my memory thing. I can see them in my head, but I've also set up mechanisms like, I send money away from that account into an investment account on a regular basis, weekly, like not monthly, weekly, and I just see it as an expense. And so what that does is it forces me to operate with a lower balance in my daily account that I look at. So therefore, I'm not thinking, oh man, we're doing well, we're not doing well. And it has led to us having those reserves. So that's just the start of it. That's it, when we needed reserves to do acquisitions recently, or needed reserves to make it through a rough time last year, that came from that money that I was throwing aside, and it meant I had it,
mhm,
and it gave me time to make corrections to my business. We didn't have the most profitable year last year,
mhm.
but we were never at a point where I was not able to buy what we needed, not able to hire who I needed, and so that was part of having those reserves in place. And we'll turn around next year and we'll be better. I'm still
Yeah.
very focused on growth of top line revenue. Um, but profitability is important still.
Yeah, and so the book that James referenced, "Profit First" by Mike Michalowicz, is, I think, a book every single business owner should read. And the idea behind it is you take profit first. So you literally take a percentage of the cash that comes into your company and move the money. He recommends weekly, but, even twice a month, look at the deposits in your bank account that are cash, take a percentage and move it to profit account without fail. And even if it makes you uncomfortable because your cash flow becomes tight in your operating or your OpEx account, what it does is it forces you then to dive deeper into the expenses and cut back, on costs that are not necessary. So it forces the issue. It makes you uncomfortable and makes you look at it.
Absolutely. And if I recall, he says a different bank, and that's when we do a different bank. So it's when I look at my OpEx accounts, I don't even see it because the whole point is it's psychological. You don't want it in your mind that, oh, we got this nice, $300,000 reserve here, or this $25,000 reserve. Whatever happens to be for you, you you don't want to look at it monthly. You don't want to, just just let it scroll away following this procedure. And so I
Yeah.
absolutely would concur with you that it is an excellent book, and anybody looking to improve their business should read it and should follow the advice in there.
Yeah, absolutely. I know we've implemented it in our business as well. And several of our Alx Council group members have done that too, right? Because we didn't read it as a group, but we brought the book to the group. And then once everybody read it, they're like, oh man, I got to implement this. And so it's been good. It's been good for several business owners, not just in our group, but all over the country.
Yes, yes. And I can tell you, like, another one that's real common in small business. A lot of times, if you own your real estate, your
Mhm.
accountant or your attorney may have you have that in a different entity. I've seen businesses save until the end of the year to pay that rent. I would recommend that you do it monthly because again, it's out of your account, it's out of your OpEx, and you're forced to operate with what is actually in there instead of at the end of the year deciding, well, we have to cut rent this year because we didn't have enough money.
Yeah. And it's interesting. It didn't really occur to me until you gave that example, but I have a simple plan, simple IRA for my team members, and I contribute 100% up to 3% of their salary. And I have to do that by the end of the year, but I do it every payroll. I'm just move the money because I don't want to look at it. I want to make sure it's covered. Don't want the stress of that coming up at the end of the year. And so just little small adjustments like that help keep
Absolutely.
flow. That's right. Okay, so let's talk a little bit about budgeting. What's your philosophy on like an annual budget or quarterly budget? Do you do one? How do you do it? And um, do you stick to it?
I am not a budgeter.
Okay.
In maybe the traditional sense, I have some goals, and we try to relate that back to what we need to do, and either the number of transactions or the growth in business locations, or in the veterinary world, there's a lot of data that says it ties to the number of doctors and number of examiners you have. So I have a general idea of where I want to go. If I'll say last year we did $8.5 million, I would across most of our entities, I would love to do 15 this year. Now, that's a
Mhm.
huge goal, and I may or may not hit it. But I count my acquisitions because they take a lot of time. But it may not be the whole year. All those things, but I don't actually make a formal budget. Now, I do take a look at regularly, like every 2 weeks or every month, we are looking at our P&L, and we've worked further and further to get our P&L up to date on a monthly basis with a closeout with our accountant. And no, we didn't do it day one. That was very hard. But as we've gone further and further along, we look at that and we look at KPIs around or key performance indicators around what percent of our revenue was spent on labor, what percent of our revenue was spent on cost of goods sold, because there are industry metrics that say what a healthy veterinary practice is or what a healthy manufacturer is. And so we compare ourselves to others in the industry. And you can, even if you can get good enough data, you can see that change over time in those industries. Like, oh, manufacturing is being squeezed right now because labor rates are going up. And we see that we're in the same boat. It doesn't mean we don't try to improve it, but it gives you an idea of how you compare to your peers. And I think that's important. Certainly, we want to beat it. We don't want to make that our standard, but that's the kind of budgeting I look at is a very shorter window, rearward looking, and how do I change it for next month?
Mhm. Yeah, I like that. Steve Denny, who was on the last show, he teaches in his CEO to CEO program that you should take your P&L and look at a 12-month rolling average and look at the optimized months in each expense category. So let's just say you're looking at February, marketing was, 2% of your budget. And then in February, it was 6% of it, so every single expense, including labor and all the other things, and work backwards by looking at the month that you had the lowest expense. So that's your optimal month for that category. And your business ran just fine. If it did run just fine during that
Mhm.
month, then you can function at that level. And so if you take optimal over the 12-month rolling average in each expense category, it's a great way to optimize expenses and reduce expenses in your business. Have you ever heard of that or have you done anything like that?
No, but it makes sense because we see a lot of seasonality here at the lake and in the vet
Mhm.
sector. So that kind of compounds what we see here at the lake at our clinics here at the lake. June can be 160% as busy as the month of January. And
Mhm.
as I said earlier, I don't lay people off. So how do I draw in business in January to match and try to normalize my revenue across the year? There are challenges. We have snow days or other things that are just going to always limit us. But looking at those across the board really does help us see what works well, and we can see where we lose profit in the year. In June we may operate with the 42 to 45% labor cost. In January, if it's in the 50s, I'm not surprised because that's such a change in our revenue. So if I can figure out a way to solve that problem and bring people in January, I would certainly benefit.
Yeah. How do you approach challenging conversations and tough decisions in business?
Um, yeah, so I've got a great team, and I've tried to surround myself with people that have better skills than me in certain areas. I am not the best at. I will run from a conflictory conversation in management. I don't like them. I will delay them. It's not great. It's not good for me. It's not good for my business. It's probably the one thing that will weigh on me the most at night. Not the financials, not other things. It's that conflictory uh,
Mhm.
conversation. But I'll draw it back to where I get a lot more comfortable is when I have reasonable boundaries and core values for myself and for my team about how we're operating. I can feel bad for somebody for their situation because I'm going to have to let them go. But the boundary I set is that you're not going to miss more than 5 days. In a 6 month period without doctor's notices, or maybe it's a year. But having a framework that you've communicated to your team in your policy manual, and then following that framework, you shouldn't feel bad for following. And then I don't. I've gotten a lot better at feeling comfortable with that, and I would say that's getting it down on paper, putting it in a policy manual, and then following it from that standpoint. I get all the time. I get pushed with, well, can we do this as a reimbursement for education? Like, how does it fall in the education policy? We do a lot of reimbursement for education, but it didn't meet what I wanted. And the answer is no. I'm going to treat you the same as I treat all my other employees.
Yeah, that's actually really good advice. So what is the toughest decision you've ever had to make in your entrepreneurial career?
Um, that's a hard question. I don't know that I've ever thought about it that way because I don't.
Yeah,
Maybe there's something that's different about me. Is if I thought this was tough, I probably wouldn't be here. So I
yeah.
I don't view any of my decisions as tough. There are certainly moments I haven't liked about it. I go back to our first acquisition in the vet space, and my wife fought me very hard to buy the clinic she was working at 'cause she loved the team. And man, we came in there like bulldozers and changed it to the style we wanted. We were the maybe I wouldn't say we we changes. We wanted to target top quality medicine. We wanted to charge for our services, not the products. And so we made a lot of changes very quick, and we didn't get buy-in of our team. We didn't learn the team. And so I ended up with very few people from that original team that my wife loved working with. And I'm still friends with a few of the people today, but they won't work with me, because of that
Yeah.
experience. And so I've learned a lot from that. And that when we go into new situations, there's certain things I can't change. I got rules around 401k that I can't bend for anybody because they're tied to government regulation and law. But there are things that I can change. And so we step in, we really try to learn how other people are doing things first
Mhm.
and see what we can learn from them. And usually what we come out with is something that is a combination of both how they were doing it and how we were doing it. And that seems to work really well.
Yeah. Yeah. Well, speaking of, you brought your wife up and, she's an incredible veterinarian and you guys have a lot of kids. And so talk to me a little bit about work-life balance and what that looks like for you and recommendations you have for other entrepreneurs with family.
To me, I don't think there's any such thing as what most people think of this work-life balance.
I happen to
Both
agree,
happen.
by the way. I totally agree.
Both have to happen.
Yeah.
I like my life when I have funds to do certain things. Like I said, I like to fly. I haven't done a whole lot of it. I like to travel. Um, and so we work very hard. My wife works very hard. She's worked 6 days a week for the last 2 years. Um, but then I would say we play hard. We took a trip to Thailand. We weren't able to do it honeymoon when we got married in 2013. And so we took a trip to Thailand for our anniversary last year, 10-year anniversary. And that was a big trip. We took a cruise last year with the family. And as you said, I've got 4 kids. I've got Tobias, Elliot, Gideon, and Franklin, and they're 7, 6, 3, and 2.
That's
The
amazing.
3 and the 2-year-old were up this morning at like 4:30, waking me up. We weren't getting sleep. There's times when we are crabby because we are tired. We have worked our butts off. And so we try to do the things we enjoy to do. I will say we probably do give up things. Our kids don't live the same life as every other kid. They're not every one of them's not on a sports team because it takes a lot of time commitment. And I might feel a little bad for that. But our kids have also had experiences that no other kids are going to have. I mean, they've traveled more than some. So not everybody's life is the same, and just like everything's not fair, I think we're giving them a great life. We enjoy what we do. We enjoy the challenge. My wife loves practicing medicine. She doesn't really get involved in the business. That's what she does. She practices medicine with the patients she loves. She goes to Walmart. She might not recognize the client, but if the client can talk and describe their pet, she's like, "Oh yeah, you're Fido's mom," because she has the connection with the patient. She loves them. But she's on
Yeah.
the floor with them all day long. So yeah, work life is different for everybody, and
Mhm.
and it they both have to exist. We can't just have life without work. And
Yeah.
so find what works for yourself and make the best of it.
Yeah. I completely agree with you. I had someone ask me one time, how do you do it all? How do you balance work and life? And I don't have kids. So, and I just said, I don't really believe in the whole work-life balance theory either, because as entrepreneurs, generally speaking, we're doing it because we love what we do. So my work really is my life. I just love what I do. So I don't even see it as working when I'm doing it. And like you called into our mastermind from Thailand, on the other side of the world with a
Yes.
12-hour difference.
Yeah, yeah. Luckily, it was like 8 o'clock at night, and it was 8 o'clock in the morning here. And I think I left about 10 o'clock at night, so you were quite done with it for the day. But I'm like, I'm done for the day.
Yeah.
But yeah, no, I mean, we'll keep going. People ask me the same question, like, why do you do it all? Or how do you do it all? One, it is having a good team. There are times when we are extremely busy because we have let our core values slip, or we don't have, we've let our team slip. And so as you get bigger, you need a team. Think of, again, I'll reference back to the Fortune 500 companies. They have a team of people that make things work. Yes, there's a face, there's a CEO, but there's typically a CFO and there's a CTO, and then there's a team of VPs. It takes an extremely good team. And if you're going to build a good team, you need good core values. You need to people need to believe in your mission. They need to see it. You need to share the because or why you're doing things, because that is helpful for people building their own roadmap in your organization.
Yeah. Yeah. I couldn't agree more. So let's just kind of shift to technology and innovation. And, the hot topic right now is AI. And, I've been doing trainings for AI all year, all over the country, and do a monthly Zoom webinar for people. And I know that you have been delving into AI and you have a goal this year of leveraging AI much more heavily in your companies. So give me your thoughts on AI and some of the ways you're using it, some of the ways that you might recommend other people to use it.
Uh, for me lately, it's been a tool for conversations. I've been playing with ChatGPT's paid service, and I will literally get in the car instead of turning on the news. I will ask it questions, and no, you can't trust every answer, but you can probe it. You can ask more questions. You can challenge it and say it's wrong. But I'll ask it questions about
Mm.
structures of entities and why would you choose an S corp or an LLC. And I've researched this for the last 10 years on my own. But I'll have a question about it, or how do you acquire one entity without creating big tax consequences, or is there certain kinds of reorganizations that are allowed in the IRS? I don't want to focus on tax topics because I've dealt with some acquisitions lately that these have been the conversations. But other ways I've used AI is, I found myself needing to let go of a few um, advertisers that we were using, and we weren't getting the results we needed. But I wanted to be polite because we could go back to them, and so I just asked AI, gave it a little bit of information, maybe a paragraph saying, hey, I need to terminate some radio ads. I want to keep it very positive. Say, hey, the experience we've had over the last year has been great, but we'd love to terminate this at the end of our contract. And it gave me an awesome one-page letter that, you know, I would spend 3 hours writing, and I spent,
Sure.
30 minutes changing some proof on it, or 10 minutes for changing some proof on it. and I sent it out, and I got great kudos and follow up from people. I mean, uh, everybody that I was doing business with called me and said, "Hey, thank you. Let us know when you're ready to go back again," and we will be. We were just cutting back because of that rough time I referenced last year. We needed to cut expenses, so we did.
Yeah, yeah. I mean, there's so many ways you can leverage it. And just to kind of ease the mind of some listeners while you're driving and using ChatGPT, if you didn't know, there's an app and you talk to the app, right? So it actually, you talk to it and then it sends what you said to ChatGPT, and then ChatGPT will read you the answer back. Perfect.
It's very conversational. It's very interesting.
Yeah. Yeah.
Uh, it's fun at times. It's fun to ask it funny questions. I mean, my kids have fun with that. I got to imagine. I didn't have a cell phone until I was in high school. We had a corded phone or a rotary dial when I was a kid. So I've seen a lot of technology change, but I still think my kids will face even more, and they're going to be using it probably for homework the next year too.
Yeah.
Getting away with it. It's nuts what it can do. But that just brings me back to like challenge the way things have always been done. This isn't directly related to AI, but I'm sure AI would have made this simpler. In the last 2 or 3 years, we looked at our biggest vendor that we and purchase 3 to 5 times a day. We end up with 3 to 5 invoices a day during the week, and there's maybe a dozen lines on each invoice, and we were entering every single one of these into QuickBooks. But so, I sat down and wrote a program that was about 40 lines of code, self-taught in Python, and we import all of those from CSV files now. I probably cut out, a $40,000 a year job. I didn't fire anybody. We just reassigned them to something way more important than entering data into QuickBooks. And so challenging the way things are done, there were no tools to do that. There was all the little pieces. Think of how you can put different pieces together to do things that you have to do, but don't bring any value.
Yeah. And that's a really good point because ChatGPT now, I mean, it even writes code.
It's
And
made it a lot easier. Yeah.
yeah. And I don't know if you know this, but I also have a coding background. I was a senior engineer at Lockheed Martin. So we kind of come from a background of, tech like that. And ChatGPT will also integrate with Zapier. So if you use Zapier for integrations between applications and you can't really you don't have the expertise or knowledge to create a complex Zap, ChatGPT will do that for you. You just tell it what application you're starting with, what do you want it to do in the other one, and it'll write the Zap for you, which is incredible. Saves so much time
Awesome.
and money. Okay, so we're coming up on an hour. I like to sort of wrap this conversation up with some real practical advice. Um, you've been an entrepreneur and a business owner for a long time. You are one of the most financially literate people that I know. Um, one of my biggest joys in our Alx Council meetings are when are helping other people try to understand the financial aspects of business because in reality, we're all in business to make money, not break even, certainly not to lose money. And, most entrepreneurs, that's their weakest area. They're good. They start their business because they're good at a certain skill set, what they do. Like for me, marketing, somebody who grooms dogs, they start a dog grooming business. So they're good at the skill, not good at the other stuff. But to be a successful business owner, the other stuff matters. So, what would you say to, people listening? Like, how do you even learn it all? Do you hire it all out? Or, how do you get your arms around it so that you can be profitable, pay people well, and, really run a successful business that ultimately, as Steve Denny would say, you will exit from one way or another.
Well, I want to answer the last part of that first.
Yeah.
You should go into business knowing what your exit is. Um, in the vet space, there's a lot of roll up companies, venture capital. My wife and I went into this knowing that we wanted to set up a lifelong trust, a board, and so we want to get very large, self supporting. We do not plan to exit in a traditional manner. We would like to make sure we've paid ourselves well. We've built retirement as employees and have enough to live off there so that there could be a family trust set up. And that's our exit plan. And we knew that from day one or shortly thereafter as we're trying to figure this out. We set up a trust. We know who's going to run the company if, heaven forbid, we die in a car accident. We know where that value is going to come from. Um, but day one, you are doing everything. You're probably running payroll with one of the many online payroll providers. You may be using QuickBooks or Weave or some other tool for your accounting, and you probably are doing accounting on an annual basis with your accountant for taxes. I think as you grow, you need to find people. I'm going to drag it back to, Alx Council, mastermind groups, meeting with a group like that of people who've done it. They're going to point out areas that other things have been done. And so just knowing something can be done a different way makes it 100 times easier for you to tackle and do it. Instead of you thinking it's impossible, you're like, oh, I see Jack over there did it that way. I can do that too. That's good for me. And so that makes, again, things easier to attack if you know it's been done before. Two, if you know you have a weakness in an area, those are the areas you hire for. You get yourself so busy that you're working, 60, 80 hours a week, and say your primary thing is dog grooming and you want to get back to grooming, hire somebody that handles the marketing and the bookkeeping. And so that might be contracted out to your accountant, and they might be doing stuff more on a monthly basis or weekly basis for you. It might be, you know, empowering somebody that's already in an organization, somebody that's doing reception that says, "Hey, let me pick up those invoices for you." Our one of our best bookkeepers in our organization was literally a veterinary assistant, and saw I was struggling with getting invoices entered on time because I will tell you, I'm not the most organized person. And she's like, "Hey, let me take that pile for you. Would you show me how it's done?" She know how to do it, but I showed her how it's done, and she took it and ran with it. She doesn't have an accounting degree, and we are still learning stuff to this day, but we always challenge ourselves to find new ways to do things. And we've shifted tools. I want to say in the first 5 years, we shifted credit card processors 5 times. And now I have a rate when credit card processors reach out to me, they're like, "Oh, we can beat it. We can beat it." I send them my, statements, and they're like, "Oh, we can't do anything there." So you challenge it so much and make changes. We've shifted from QuickBooks Desktop and QuickBooks Enterprise, and now we're QuickBooks Online. And I'm recently we're in Odoo, which is a ERP software online, and we're liking that a lot. And so as we grow, the tools that worked for us yesterday are not the same tools that are going to work for us tomorrow. And keep that in mind. If you're happy with the status quo, that's great. If you're a small business, I watched my father run a small business. He likes not having employees. You need to make sure you pay yourself a fair wage, and then try to make a profit on top of that. I see so many small businesses that are basically own their own job because they want to be their own boss, but all they are is making a wage for themselves, and sometimes not even a competitive wage in that industry.
Mhm. Yeah, I couldn't agree more. And it took me 20 years. So this is our 25th business anniversary. Literally took me 20 years. And getting into Alx Council as a member back then was part of that shift for me. And it just took me um, the insights from other people to come to the realization. And I consider myself a relatively bright person, but like I had a job for myself and 13 other people at the time, and there was really no value to my company. I was just paying a bunch of people and myself, which was better than a lot of people did.
Then I want to interrupt you there because there's nothing more painful than that. Because when you have that first hiccup and you have no profit,
Mhm.
who suffers? It comes out of your wages. It's not
Exactly.
coming out of profit. It's whether it's a mistake, you got to refund a customer. Whether it's employees want more wages and you can't change your pricing structure yet. You know, it's going to come out of your pocket. So when you operate at a profit, it doesn't have to be huge, but when you operate at a profit that's fair for your industry, and again, go back and look at the industry, you have a lot more room to be nimble as you continue to address the changes in our economy that are way out of your control, the changes in our society that are out of your control. It gives you time. So profitability is key to being successful. They say the number one reason companies go out of business is cash flow, and profitability and cash flow go hand in hand because profitability, they don't always pair up great, but you have to be profitable to build up a cash bank or, something that you can pull from. And then secondly, cash flow is important, so that you can continue to pay your bills.
Yeah. Yeah, I mean, as an entrepreneur and if you have employees, you care deeply, usually, about your employees and your team, and trying to figure out how you're going to make payroll every 2 weeks or a week or however often you do it is no way to live, right? It's stressful. So you're absolutely right. So go back to the book Profit First. We'll put a plug in for that again, by Mike Michalowicz. It's a great book. And James. Yeah, I just always fall back to Jim because you're Jim to me. But I so appreciate your time, and I hope you know just how much as a business owner I absolutely respect and admire you. And I moderate that LX group now, and I really miss being a member and being able to have these conversations about my business. But I learn from you every single month when we're together in that mastermind, even though I'm not bringing my own issues to the table. And there are certainly a lot of issues, right? Yeah. So thank you. I really appreciate your time. I really appreciate you trusting me, blindly to just come on here and go with it. And you've said so many valuable things. I just can't get over it, as you always do.
Awesome. Well, it's been a great. I always love sharing with everybody. I think that's what makes the mastermind good for me. I will openly share with them, and they share with us. It's in a fairly protected environment. As you notice, I haven't mentioned any of the other participants in the mastermind today because we're not supposed to.
Right.
But we enjoy it because it is an open environment. It allows us to challenge each other, to improve each other, and it's great. And so, because I think it's more in how you do business and less in what we've just talked about today. Go back to core values, go back to how you lead your team. Um, you know, everybody has the tools in the world. You can build a team around yourself to run a business. It's all in the magic and how you implement those tools. And so I'm very open and sharing, and I'd be glad to come back if you'd have me back.
Yeah, I would love to have you come back, and maybe we can dive deep into some specific topics, because we kind of did an overview today. If somebody wanted to reach out to you directly, how would you like them to get a hold of you?
I'm on LinkedIn. I take messages on there. I share my email, James at r.vet. It's probably not the best way to get a hold of me. I think I have 200,000 unread emails, but you certainly can ping it there and I catch some.
Okay.
Anybody who wants to get a hold of me, they can look up our veterinary and typically get a hold of me through that team.
Okay. All right. And you can also reach out to me through, the comments in YouTube or LinkedIn, and I can make a personal connection or introduction to if it's something that you want to have a conversation with James about and leverage his expertise and insights. So thank you again, and I hope you have an amazing rest of the week. And I will actually see you tomorrow at our mastermind.
That's right. Thank you very much, Sandy.
Okay. Thank you.
Bye.
Bye.